Hey guys, happy Monday. Hope you enjoyed your weekend. Just wanted to go over what happened today in the markets. It was a huge bounce back day after Friday. Friday was crazy, and then we had almost a full reversal, but not quite. So I wanted to show you a little bit of the S&P 500 here and take a look at the reversal and see what happened. So on the top here, we have the S&P 500. This is a 5-minute chart for the last 6 days. In the middle, we have the SPY, which is, the spider ETF that tracks the S&P 500, and this is again 5 minutes for the last 6 days. And then on the bottom, we have the ES, the E-mini S&P 500 Index Futures. So let's take a look at how these all did. First of all, the S&P 500 on the top, you can see the big decline right here. Blammo. So we closed, at 2130, something like that. And when we were talking yesterday, or sorry, not yesterday, it was on Friday. When we were talking on Friday, we were looking for some support levels. So we talked about 2100 being a support level, so it didn't get down there. And then we talked about below that, 2050 being a support level also, but obviously we didn't get there. So we had this big reversal almost to where we came from. Now if we look at the SPY, it has these after-hour trading hours. So the S&P 500 index does not have that. So at the open, we opened here and closed here. So there was a gap, right? So we gapped lower and then quickly closed that gap. And a lot of times you'll see that. So in fact, the day before, on Friday and Thursday, you could have seen a pop-up to close that gap and then move down, but instead there was a pretty strong gap down, and we just kept going. So today we did see a gap down again, but it reversed, so we moved up. And if we look at the after hours, here on the SPY right here, you can see that actually after midnight it opened lower, so there was actually a gap. So the SPY stops trading at 8 o'clock and then opens up again in the morning. So there was a gap there, a gap down, and then it started moving up into the open. The E-mini S&P 500 Index Futures are really useful because they trade pretty much all the time. So you can see, well, with one exception. So over the weekend, they do not trade. So this is Friday. I think they close at 3:15. I think that might be Pacific time. I'm on Pacific time. But anyway, because I think they close at, 3:15 Central time, which is 4:15 Eastern time and 1:15 Pacific time. Okay, there you go. So it stops on Friday afternoons and then picks up again on Sunday afternoons. And you can see here that there was no gap. But on Sunday, it fell down to right almost exactly the 2100 level. So the 2100 level on the the S&P Index Futures, the E-mini, is not going to be the same thing as in the S&P 500, the actual index. For example, the actual index closed at 2159 today, but the E-mini was around 2150. So there's definitely a difference. But the point is, if you look at the overnight market, you can see exactly what the S&P 500 futures are doing. So it's a pretty good telltale sign of what's going to happen on the open with the S&P 500. So you can see that both SPY and the E-mini had this little uptick for the couple hours heading into the open, and then it just continued through the entire session. Continue straight up. And sometimes you will be able to get a sense of what's going to happen throughout the day by that hour or two before the opening. If it's trending upwards, you can sometimes get a continued onward movement after the open as well. And that's what we saw today. So you might be wondering what this red line is. There's a red line on all of these charts right here. And I'll show you. Okay, here we go. So on the top here we have the S&P 500, and I'm going to zoom out so you can see what this line is. So here we go. This is the S&P 500 over the last 2 years. So right here is the high that we had in May of 2015. And if you connect all the highs between then and July of this year, when we broke up above this range, you get this line. So this line was a very powerful line, really. So it was hit 1, 2, 3, really 4, 5, 6 times before it finally broke above the line in July of this year. And it popped up above that and traded in this range right here. And then so overnight, see if I can zoom on this some more. Okay. So if you look at right here, here we have the open of SPX open and went to a low right on that line. So it just hit it almost exactly. Pretty amazing, really. Right at about, let's see, the low today at the open was 21.1912, which is right about where this line landed. So it's pretty amazing. So we could predict that there would be a little support there. So on Friday we were talking about levels of support, and that's one of them. So you can see that today almost became an entire bullish engulfing candle. So these are actually open, high, low, close bars. But if this is a candle, and we can make it into one, you see that the body of today's candle, if it had gone above the top of Friday's candle, that would be engulfing because this candle would be larger than that candle, which would be a bullish sign because it would say that we erased all of the bearish tone from Friday. However, it's not completely that, so we can't say that. What we can say is that we have the 50-day moving average here. We have this line of support from all the previous highs right there, and we stayed within that range. So we didn't break back up above the 50-day moving average either. So I would say that that would have been a more bullish signal. So basically what we have after today's session was we have a little, probably more of a return to a neutral stance, but I would actually err a little bit more on the bearish stance since we were unable to pass above the 50-day moving average. Now tomorrow or the rest of the week, if we fall below this line that I drew, that's right about at 21.19, 21.20, then I think the next thing you'll see is 2100, which is here. And then the next thing would be the 200-day moving average, which is right here at 2157. So 2150 would probably be a really big area of support too. So that's probably what you'll see going forward in the next week or two. If we are able to get through the next, to the middle of October-ish without breaking those levels, then we'll probably be higher at the end of October because the election's coming up and everything. So if we don't have a downward move of, 3 to 5% in the next couple weeks, really, leading up to the Fed, then we may not see one for the rest of the year. We may end up higher than these highs up here at 2193. But we'll see. So we'll take our cues from the rest of the week and see what happens. I know we've got a lot of Fed speak this week, and then we enter the blackout period and the Fed decision will come out next week. So we'll see. Crossing our fingers. All right, that's it for this Monday. Hope all is well out there. Have a good one.